Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. Our show today is brought to you by Commercial Agent Success Strategies. Check it out. It is video training for commercial agents. Learn more at commercialagentsuccess.com. Well, today we're going to talk about a topic that's very interesting we found to our audience, and that is the single tenant net lease investment market. I think one of the reasons it's so interesting is how that market is impacted by recessions and by interest rates. It seems when I look historically at it, it is impacted less. Values change less up and down from interest rates and recessions in this sector. Why is that? And then what are we seeing for changes in values from, say, 2021 to now with the interest rate changes, and what should we expect moving forward? Well, please welcome my guest. It's Nancy Miller, and Nancy is a partner with Bull Realty, and she's president of the Net Lease Investment Group. Nancy, thanks for being with us.
Thank you, Michael. Glad to be here.
All right. Well, yes, if you're a broker at Bull Realty or a client that lists properties with us, yes, you probably have a better chance of being on America's Commercial Real Estate Show. But Nancy, hey, has been an expert for many years, and the audience really loves hearing from Nancy probably about once a year on this important sector. So Nancy, let's start with that question. You know, what are you seeing for differences in cap rates on a lot of these single tenant net lease properties compared to, say, 2021, early 22, when maybe you could get an interest rate on a loan at 3.5%, but today you might pay 6.5%. What have you seen cap rates change?
Well, if we assume all things are the same, quality, location, et cetera, the strength of the tenant and the length of the lease, you're going to see cap rates have gone up. They've gone probably up 100, 150 basis points. I might have been at a 6% cap rate, and now I might be at a 6.6 to 6.9 cap rate for the very same property with the same types of conditions on that lease. Yeah.
Mm-hmm. Well, it's interesting to see that, you know, the change in cap rates, you know, is only changing. Well, it seems like you're saying 50 basis points to 150 basis points, depending on the length of the lease, right, and the credit, which is amazing when, you know, some of these leases on these single tenant properties don't have a lot of escalation, right?
Yeah, most leases are 10-year leases or 15-year leases fixed. We've seen a shift in the dollar store environment where they're now increasing the lease a few percent every 5 years just to be competitive. But QSR typically will increase leases every 5 years. And if they're a franchise, which would have a little bit higher level of risk in the mind of a buyer, they're having rent increases every year. But that's unusual. Yeah.
So there are a lot of things that really impact the cap rate of what these properties will sell for today, isn't there?
Oh, yeah. The lease term, as you mentioned, shorter lease term, location, is it internet proof type of business, those kinds of things, a whole lot of things, access, ingress, competitors nearby, is it a corporate or franchise location, and it on the lender side, they ask those same questions. Yeah.
Well, one of the things that is concerning to some investors, whether they own them or buying them or loaning on them, is a renewal risk, right? And so you see the properties with 10 to 15 years selling, and then you see some that, and even some buyers that like really short lease terms left. What are you seeing for differences in cap rates on some of those properties?
Well, the shorter lease term ones are attractive in one sense because an investor knows they're going to buy them at a higher cap rate. So if the investor's looking to do that and they have some knowledge about that tenant type, they're going to kind of know, and they can ask us to some degree, we can kind of know if that property type and based on the location and so forth and some of the information that we look at, if it will renew. Sometimes they'll ask us if it will renew, and we could be pretty accurate about that. But you can get far better cap rate at a shorter cycle, and also likely buy better real estate than you would normally buy in terms of being more on Main and Main than in some secondary market. as the term of the lease shrinks down.
Yeah. Well, I like that you have the special tools and knowledge to ascertain renewal risk, because a lot of these tenants don't report sales, right?
That's right. And we have some systems that we look at that do a very accurate estimation of store traffic, of estimated sales, of year-over-year differences in terms of foot traffic and volume. And it's very, very helpful for us to feel good about bringing a buyer to a particular property.
Yeah, it makes sense to understand the value and the risk, or the opportunities in some cases. And Nancy, we've seen transaction volume in the commercial real estate world had a drop by an average maybe of 50% around the country, almost all property types, since the Fed's rapid increase in interest rates. But now we're seeing things kind of stabilize. We're seeing transaction volume in the office properties, retail, industrial, kind of everything kind of starting to ramp up. What are you seeing in the single tenant net lease world?
Well, you mentioned cap rates coming up from 21, and even last year we saw in 23, I should say, they were around a 6.2 average cap rate, and they're up to, in 2024, a 6.5%. In the property range that I was most looking at, about somewhere in the $3 to $4 million range, with property value, and also a 4% and above cap rate. So we looked at a whole bunch of those. So we're seeing an improvement for the buyer on the buyer side, for sure. And average volumes, they did in 24, in this group, 4.5 billion in total volume, and in 23 it was 4.1 million. So you can see that there's an increase in activity. Yeah.
Well, Nancy, let's talk about financing and what folks can get today, and what are you seeing for trends there?
Financing has been pretty good, as long as the difference between the cap rate and the interest rate is there. Lenders will finance on a 25 or 30-year AM. They'll do a 5 or a 10-year, 7-year, sometimes balloon. And we're looking at anywhere between a 6 and a 6.9, as you said earlier, about a 6.5% average. And the lenders are being more particular. We're seeing in the past maybe an LTV of 70%. Now the LTV is going to have to be between 50 and 65%. So people are going to be putting in more cash, because lenders want to see positive cash flow, and they don't want to see people with negative cash flow as they go forward, because rent bumps may not be annual, as we said a few minutes ago. They may be every 5 years or every 10 years, and they want the asset to be healthy.
Yeah. What are some industries or tenants that are pretty active out there, either expanding or that kind of popular with buyers today?
Well, there are two different questions
right,
there.
I know.
the popular with buyers, I'll say for a second, dollar stores are by far and away the largest. I think Dollar General sold 160 units last year. And you've got your fast foods are also in that whole spectrum, your Wendy's and your all kinds of folks. I broke down here because I was interested in this. Starbucks, 110, 111 units last year. I guess reducing the price of coffee helped them. Burger King, Taco Bell, Wendy's, Chipotle, and only a few things like a Dutch Brothers paint and a Take 5 oil were in that top tier. So, it's an interesting world. Do you want me to answer what I think are my favorites, or
Sure.
Okay. My favorites, I think, are the auto, collision, tire, repair area, medical, any kind of medical, dock in a box, those kinds of things, and other specialty things, veterinarian, those kinds of things are really hot now. I do think because of the economy and because of inflation, we're seeing a little bit of inflation, the dollar stores will become much more prominent again, like they were in COVID. So I think the discount stores, your discount retailers, your big box grocery, those kinds of things will continue. Your big box, your Tractor Supplies and Costco's and whatnot, they will start to continue increasing in sales volume. And those I look at personally. What would I buy? Where do I shop? And that's where I typically head to in terms of looking at net lease property types.
Yeah. And you mentioned the oil change tenant. They're still developing and building new ones, and buyers are still buying those, right?
That's another debate for another day. I think that the EV world is going to be here, but I don't think it's going to be as dramatic as we first thought. I think gas and hybrid will be with us for a very, very long time. And the oil change world, they happen to buy always good real estate. So if they ever have to get repurposed, they're usually in a very, very active and good location. So I would be up for the challenge to say that real estate's still good to buy.
Yeah. Well, it's interesting. One of my clients asked me to sell them some quick oil change single tenant net lease investment properties, and I said no. I said no, I'm not doing that. And just my personal opinion is like, and then sometimes the sites are smaller. What are some tips for investors, for buyers that you would share that are looking to acquire properties, single tenant net lease, or looking to increase their yield or increase their safety or diversify?
First of all, I would look for strong credit tenants, not a mom and pop. I don't think you have to look in your larger cities. I think if you're trying to improve your yield or your cash flow, consider the same tenant in a smaller city. So instead of Atlanta or Dallas or somewhere, go outside to a secondary, tertiary market, but still buy that McDonald's or that Burger King or whatever you're going to buy, because you're still getting the good brand. You can also look at, in some cases, a franchise versus a corporate operated one. Some people say, oh, I don't want a franchise. Well, a franchise operator can be highly experienced, and the cap rate on a franchise will be a higher cap rate. So you can...
How much higher, roughly?
I'd say if I were looking at a brand new McDonald's at 5.9 cap rate, and if it was a franchise store, I might get it at a 6.1 cap rate, so to speak. The other thing, cash is king. If you've got cash now, you are motivating sellers, because sellers have been holding on a little bit longer. And I think the average sales cycle, days on market for some of these net lease properties are about 180 days. And I think sellers we're seeing more 1031 buyers out there right now, and they're coming with cash. Some of them can buy more by what we were talking about, going and using leverage or financing and putting a bunch of cash down. So there are more 1031 buyers with cash and who are financing now in the market as well.
Yeah, I've seen the same thing in our practice, and we focus a lot on office properties and medical and government lease properties, and we're seeing a lot more 1031 buyers in the market, which I think is good for the industry to start moving doing more transaction volume. And someone came up with this saying, I think I saw it on social media, but I like it. It was like, date the rate, marry the deal, right? So, interest rates change over time, but and I think a lot of buyers are out there in the marketplace today saying, you know what, this might be a great opportunity to be buying, because if real estate is normally a long-term hold, which it normally is, right, then it's really about the asset, the property, and the tenant and the basis that you get in. So it makes sense that 1031 buyers and cash buyers might be out there wanting to buy more properties, and obviously the sellers really like that. Right? What tips would you give for a seller or owner who owns multiple single tenant net lease properties and looking at their portfolio, maybe thinking about when to sell or what to do with these properties?
That's a individual question that I think is based upon many things. The age of the seller, the average lease term is what's most saleable and top of the market now. What would I do with that money? Would I reinvest and do another exchange if I did a 1031, or would I take the money and run and pay the taxes? We hope that they will do an exchange, of course. But there are a whole host of things, lifestyle choices, but we're working with an investor right now who has put all of his portfolio on the market at the same time. His wife basically told him, if something happens to you, I don't want to be managing properties, even though net lease properties are easy and simple.
Yeah.
But so we're doing that and getting a good bit of activity for him. And we kind of know where we're going to get the most activity on those properties that have the longer leases, the better tenants, the better locations. Are they triple or double net, and so on and so forth. So we really like to explore what the strategy would be when someone comes to me. I'll sit down and I'll say, well, what are you trying to do? Yeah. And what do we think is the best case here? What do we think the cap rates will be for these kinds of properties? And if you held some, what would you want to hold?
Yeah.
So we kind of go through that whole process.
And makes sense. And you look at the debt that they have on the properties, and right, and that maturity and the diversity, right. What kind of tenants they have.
That's right.
And that's something that we do for clients with all kinds of property types and some family offices and such, where we kind of go in and look at all those things and then understand the mission and then help them make decisions. Well, Nancy, what would be your parting words for our audience related to single tenant net lease properties kind of moving forward through 25?
I would say it's going to be a robust environment this year. It's going to be very good. I think the supply is going to diminish a little, but there'll be quality properties on the market. We're a good resource to work with folks to say, what do we think about it? Let's pull the curtain back and see. Also, one of the things that we're seeing is increased costs of new construction for materials, for labor, for land. That is going to take the same property. And I have an example. We're going to be listing a Dollar Tree in Savannah. The guy paid $1 million for the land. That's unheard of. Construction costs are up. That property that will be the same cap rate as it might be in another place, but because the unit cost has gotten so high, the actual price point of that property may be a $3 million price point, while if I bought it somewhere else, it might be $2 million, just because they have to build in the rising costs. So now is a good time for people to consider before this really impacts us. Many properties have been on the market a while that are really good ones that were in at a lower price point. The construction costs were lower. The materials costs were lower. So there's some value now that will shift over the next year or so, even though cap rates will kind of go up just a little bit and interest rates will probably, there's a new normal there. So it's actually a very good buying time now.
Yeah, that's a good point. And I like your point about the interest rates, because I think a lot of the market for the last couple of years has been waiting for interest rates to go down. Why buy? Why sell? Why develop? Why invest in your business? If rates are going to come down, and the Fed's telling us they're going to come down, so they want to freeze activity. But now it looks like we're back to historic normal rates, right?
Think so.
And
I think so.
I don't think there's a lot of expectation that we're going to drop, especially materially. So people are getting active again, and like you said, it's a good time to get in at a lower basis. It's a good time for your seller. Market activity's robust. There's 1031 buyers. The activity we've seen that's increasing probably since the Fed started lowering rates, and then the election and the first of the year, we're just seeing activity escalate on all of our assignments. So it's time to get out there and do business and have a great 25. Right. Nancy, thanks for joining us.
Thank you, Michael. I appreciate it.
All right. And thanks for joining us around the country. If you'd like an analysis of any property that you're looking to buy or sell, let us know. We'll hook you up with Nancy or the right people around the country for any property type. If you have any questions or thoughts for me, my email is an easy one. It's michael@bullrealty.com. Until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty, commercial real estate sales, leasing, and advisory services. Visit bullrealty.com or reach out to me directly. My email is michael@bullrealty.com. By ShareFile. Designed with real estate and other highly regulated industries in mind, ShareFile offers secure digital solution to simplify workflow and improve collaboration. Visit sharefile.com. By Commercial Agent Success Strategies. 21 cloud-accessed agent training videos. Learn more at commercialagentsuccess.com. You're invited to subscribe to the show wherever you listen or watch the show. You're also invited to subscribe to a weekly email announcing the show topic and guests at creshow.com. Thank you for watching, listening, and sharing America's Commercial Real Estate Show.